All right, welcome back to QuickBooks Online. Here we are looking at chapter 5.1. In this case, the order of the book, it's kind of weird, but in this case, I'm going to skip a little bit huge chunk in chapter 5, which is going to be advanced transactions, and I'm actually going to dive into what the sections where we're dealing with accounts payable, advanced accounts payable transactions, okay? So this is going to be dealing with vendors and what to do when you have those abilities to receive a vendor credit and or do a vendor refund, okay? Because oftentimes when we purchase items from our vendors, oftentimes things will happen such as maybe they sent us the wrong product, we overpaid the vendor, or there's something wrong with the vendor, or something happened to our vendor. So there are things where our situations where that causes us to have to return those products back to our vendors. Okay, so making sure that you are aware about the difference between a vendor credit, okay, and of course receiving an actual refund from our vendor. Okay, there are two different things, but essentially they are going to be two things that we're going to be needing to know for this section here. Okay, so again, for a vendor credit, it doesn't necessarily mean that you are returning the product. Maybe you received a discount for any of the items that we purchased. Okay, so this is where we're going to talk about terms and how they have discounted terms. Okay, so vendor credits. Okay, so make sure you are aware, because when we talk about this in chapter 5.2, where I talk about what happens when you are returning products to your customer, we use credit memos for customers. Now, there is a huge difference between a credit memo versus a vendor credit. Credit memos are usually issued to your customers, while your vendor credits are usually issued by your vendor. However, in the real world, we understand credit memos as something that we apply to both vendor and customer. Okay, but in QuickBooks, it is very crucial that you know the different languages between this, because a credit memo cannot apply to a vendor. Okay, so that's why it's very crucial that you pay attention and know the difference between a vendor credit and a credit memo. Okay, so we're going to talk about how we actually create our vendor credits. Okay, starting with the very first thing is when we log into our company file here, right? So again, this is a continuation of what we've done so far. So if we go ahead and take a look at our expenses, right? This is what we've done so far. We've done a bunch of bills. We've done a bunch of, purchasing and buying and so on and so forth. So that is where we can, so make sure that you do complete all the assignments ahead of time before continuing on the next section. So in this case, right, you need to have done chapter 4 ahead of time before you can complete everything that you can do for chapter 5. Okay, so in this case, right, I've already had my bills and things in there, and we're doing a continuation from the previous lesson. So let's take a look at how to create a vendor credit. Okay, so looking at our PowerPoint here, we're first going to set up our account settings, because in this case we need to ensure that we have automation turned off. Okay, now when we are dealing with vendor credits and things like that, it is crucial that we try to avoid having automation done for us. So here I go to the gear icon under account and settings, and this is going to be an advanced tab. So I'm going to click on advanced, and I'm going to scroll down to automation. Now notice this, I have everything turned off, right? So it says right here where you're going to have pre-filled forms from a previous entry. We turn that off. Okay, so then again, you don't want to pre-fill things that, again, if you're not dealing with the same vendor or not dealing with the same customer, you don't want to have this pre-filled for automatically. Right? Second thing says right here, automatically apply credits. This means if you create a vendor credit, okay, it's going to automatically apply it to the bill. You want to avoid this because, again, if you're not keeping a really good track record of making your payments on time or making things on time, right? You want to avoid this because you want to make sure that you apply those credits yourself, so then when you record your bill payment, right, you know why you're paying this much amount because you're applying the credit to that particular invoice. All right. And then the next thing says automatically invoice unbilled activity. So again, when we talk about billable expenses, right? This is to automatically bill those that we haven't billed yet. You don't want that there. You don't want to automatically apply bill payments either. So this one is one of those unique features. So again, if you've heard of auto pay is a feature that you can set up to with your bank account to automatically pay bills. Okay, so again, another dangerous thing about that is if you're not aware of things like when you auto pay for example, you make an auto payment on a credit card, right? If you're not keeping a really good track record of that and you're doing an auto payment or a bill payment, it's going to automatically take the money out of your checking account. And if you're not keeping a good track record of your business, right, that can really mess you up in terms of your QuickBooks because, again, if you, for instance, you have a monthly payment that you're taking out from your money from your checking account, you need to manually update that if so that you know how much money you actually have. But if you do use this auto bill payment, right, or in this case, auto payment, right, then it will help you save some time. But at the end of the day, again, this is just for, again, if you're not a really good person that's keeping track of your own checking account and things like that, you definitely don't want to do that. You want to actually manually do it on your own so you can see where your money is going. So in this case, I made sure that all 4 options are turned off. Okay. So next thing is now applying our vendor credit. So in this case, right, how do we create a vendor credit? Well, in this case, like I said, our best friend here, right, is going to go to your plus new icon here. And you're going to see that you have a vendor credit option right here. All right. You're also able to do that through your expenses tab 2 or your expenses window here. The expenses window, create new transaction here, and you could build your vendor credit right here as well. Okay. So this one, right, tells us that we, again, are going to be receiving, or in this case, we will be receiving a vendor credit from Donna Distributing. So if you remember from the previous lesson, we didn't pay Donna Distributing because we want to make sure that we apply it to the bill first and then pay it off. So in this case, we need to recognize that this bill number 3, right, the one that we purchased, bill number 38999904, where we purchased 2 picture frames, right, size 5 and a 5x7 metal, and another one for 6x8 wood, right? Total 3 picture frames, and photo paper 10 packets, right? For a total of that amount. I don't remember. I think it was 665 or something like that. So in this case, what we need to do here is we need to go ahead and we're going to get a vendor credit on this. Okay? So here's that bill that we referred to, right? So in this case, we're going to be receiving a vendor credit from Donna Distributing, okay? And what we're doing here is we're going to be receiving a vendor credit for the shipping and delivery fees because they overcharged us, right? They overcharged us for $10. Okay, so therefore, since they overcharge us $10, we're going to create a vendor credit so then we can get that money back. Okay, so again, let's go ahead and create that vendor credit. So once again, we're gonna just go ahead and do the simple way. So plus new, and we're gonna do a vendor credit. Okay, all right, and then of course we're going to go ahead and put in Donna Distributing. So here's Donna Distributing. Today is the 3rd of January, so maybe you found that mistake and you are trying to fix it, okay? Or you call them up to fix it, and then they're going to send you a vendor credit, right? Maybe it was a buy one picture frame, get the second one free, or or free shipping or something like that. Some kind of crazy thing, or maybe the amount of shipping that they charged us was $30. They decided to deduct us $10, okay? So what would your reference number be? Now, in this case, we always recommend you to use a letter C. C for credit, right? Now, in this case, I'm making a reference to this exact bill that I received before, right? Just so then I can keep myself much more organized, okay? And that way I can know that this credit, right, that I'm receiving from this vendor is for this particular bill. So that is exactly what I'm making sure here, is that I am making an association, a linkage between the bill and the vendor credit, saying that this credit came from this bill. Okay, and of course you have, let's see, Walnut Creek is what we purchased it for, and it was for the shipping and freight handling delivery charges and you got to overcharge for the shipping. So in this case, I am going to go to category, okay, and we did this for the cost of goods sold shipping. So let's see, shipping and freight cost, right, which is a cost of goods sold. Okay, and here's the description, and this is for overcharge for shipping. Okay, and the amount is for $10. Okay, again, shipping is non-taxable, and once again, this is for the store. Okay, so once your vendor credit looks good, right? Everything is there. Okay, I'm going to go ahead and click Save and Close. So credit for $10. All right, so there you go. I return to the expenses window, and notice this, I have a vendor credit. Okay, now how do I apply the vendor credit to that particular bill? Well, I have two options, right? Now, this can only happen when you are making a payment to the bill. Okay? If you're not going to make a payment to the bill, then you can't apply the vendor credit. Okay? Now, but if I were to pay for the bill, how would I be able to apply it to this credit or to this bill, right? I would actually have to utilize the bill payment window, or I can actually select that particular bill, right? And then click marked as paid. So again, you do need to make a payment to the bill in order for you to go ahead and apply the bill payment. Now, yes, you can make a payment for $0 if you want to. So then you have an account balance that is overdue, right? Yes, you can do that if you want to apply the credit for you automatically, or in this case, manually apply the credit. So then when you receive the bill or when you pay the bill, you pay for what you owe as a partial payment. You can do that as well, but that's the way we have to interpret, or how we apply the vendor credit is we're essentially going to pay the bill and then we can apply the credit, so then the amount that we owe is significantly lower. Okay, so let's go ahead and make a payment by marking that bill to be paid. So we're going to look for that bill, that one for Donna Distributing, the one that's still open. So here you go, 3389904, and we're going to go to actions and we're going to mark as paid. Okay, so once I click that, this is what's going to happen. My bill is going to be here, and then down below is where your credits will be applied. So in this case, we have the bill payment credits. So you have the credit here for the vendor credit for that $10. So right now, originally you owed that $192. It is now decreased to $182. So what are you going to pay? They're assuming that you're going to pay this entire bill off for that $192.15. So again, take a look at the original one for $192.15. They applied the $10 off. So now you owe $182.15 now. Okay. Now, if you choose to not have this vendor credit apply, you can take it off. So then now you don't have it anymore. So then therefore you have no credit. Okay. And therefore you owe $192. But in this case, I'm going to add it back in here. So then now I owe $182.15. Okay. So there you go. It already found out that we had a vendor credit for this particular bill. Well, in this case, they just pulled up everything that you had for this person. So whether you had that credit or not. Okay. And then let's see what happens here. We're going to, for the amount for $182.50, and we're going to make it on payable, let's see, pay bill with credit card, Visa 5678, for that date on the 31st for the 182. Okay, so that's what we're going to do. We're going to go up to the top here. How are we going to pay? We're not going to pay from our checking account. We're going to pay with our Visa credit card. Okay, 5678. Okay, on the 31st of January. Okay, all right. Reference number. So usually you'll have your billing information here. So in this case, if you want to, I'm going to just leave it as 1. Okay. So that means I'm going to make a payment for $182.15. Right there's the amount right there. Once everything looks good, I can go ahead and save and close. There you go. So then now that bill that we had for that 33904 is now marked paid. Okay? And this vendor credit is marked applied. Okay? So now you owe Donna Distributing nothing, right? And that's how you apply a vendor credit. You apply it through a bill, a pay bills window. Okay, but in this case, I went to the particular bill itself. That way, I'm only looking at just that bill. Like we mentioned in the previous lesson, you can pay one bill at a time, or you can pay multiple bills at one time. In this case, I want to pay just one particular bill using my Visa credit card, and I did that by clicking on that bill particularly and marking it as paid. Okay, and there you go, I applied the vendor credit. Okay, so that is the very first one there. Okay, so let's do another example when we have terms. Okay, so especially when you're given a discount opportunity from a vendor. Okay? You need to be able to know how to do this because oftentimes, again, terms could be also known as discounted terms, right? Where you get to take an opportunity to pay a discounted rate if you meet the terms. So again, terms is a vendor can offer you a discount if you pay within a specific time frame. And if not, then the entire bill is due within X amount of days, right? So in this case, what we're going to do is we're going to quick add a discount term, okay? We're going to say that for this example, Mr. Stephen Boswell, we're gonna receive a bill for $1,000 for consulting and professional fees, right? So the legal fees that we assigned earlier. And what we're gonna do here is we are going to be putting in a discount opportunity. Okay? So again, terms is a condition. You have to pay within a specific time frame before you can actually record the discount. So in this case, let's go ahead and record this bill first. Bill number 4 with discounted terms from Stephen Boswell or Mr. or Boswell Consulting. Okay? So I'm first going to do is enter in a bill. And I'm going to enter the bill in for the 15th of January. Okay? So once again, I'm going to go to plus my new icon here and go to bill. Okay, and we're going to go ahead and receive the bill from Boswell Consulting. Here we go, Boswell Consulting. Okay, date is going to be the 15th of January. Okay, and then now we're going to be entering in our terms. Now, if you remember in Stephen Boswell's profile, we left his terms blank. Why? Because we never created the terms to begin with for us to have the option to choose so. So then let's go ahead and what we do is we're going to add a term. Okay? So what is this term title going to be? It's going to be a 2% discount if we pay within 15 days. If not, we're going to pay in 30. Okay? Now, in this case, it says due on a fixed number of days. Yes. And that's going to be 30. Okay? Now, let's look at the second option. It says due on a certain day of the month. In this case, that's called a date-driven term. So we talked about that last time, right? Where you have two options, right? One of them is that it's due upon receiving the bill in a certain amount of days, or this bill is due on an exact date. So again, a credit card bill is usually due on an exact date, which we call date-driven, where every single day of the month, or every single day on the month. So for example, you have a credit card, you're going to receive the billing statement every 20th of the month, meaning your payment is due on the 20th of every month, right? So that's going to be a date driven. And in this case, this is not a date driven, but we want to make sure that it's due in 30 days, right? Now, again, for this feature, for the QuickBooks Online, unfortunately, you do not have the opportunity to do a discounted terms, where if you have the QuickBooks desktop version, yes, you do have the opportunity to use a discounted term, which allows you to put in a discount due date on there so you can get reminded about that. Now, in this case, because the QuickBooks Online application, you can only do so much on this platform. So they unfortunately do not have discounted terms available on the QuickBooks Online. So that makes you responsible to ensure when those discount due dates are due. Okay, so therefore, whatever the 15th is, so that means at the end of the month, January 30th, you need to make a payment because if you receive the bill on the 15th, you have exactly 15 days to receive that 2% discount. So in this case, that is something that you may have to make a note, whether it's on this whether it's on this bill or not, there is a section down below to add any extra notes. So in this case, I'm going to create my discount terms. So 2%, 15 net 30, and of course the bill is due in 30 days. Okay, and then I'm going to save. Okay. So there you go. I created a new term. So this is called Quick Add. So again, it's a feature that allows you to add things on the go. Just like how I added that account, shipping and freight, right? You can even add vendors on the go. So like I mentioned, right? If you need to make a quick stop at Walmart, you can quick add them and not have to fill in all the information necessary, right? Because you're in the middle of your transaction. You're trying to get this bill in and be done with the QuickBooks, right? And be done with the transaction. So in this case, you can quick add a vendor if you do not have one. Okay. So therefore, it should be due on February 14, 30 days. Do I have a bill number? I believe I do. Bill number 1112. Okay. And who is this for? I believe it's for the both overhead, so both San Jose and Walnut Creek location. Okay, because you're seeking professional help here. Okay, accounting, advising, legals, and fees. So here, right, if you remember on this vendor's profile, we said that this vendor is associated with legal fees. Now, because we said that it was a legal fee that we associated this person with, it automatically populated and filled the information in there, right? Same thing with the address and everything, right? So that is why building your profiles for your vendors make it that much more easier to fill out. Okay? Description. Let me see. I don't think there is. Description is financial consulting. Okay. Okay. So remember, this is not in your book, but it's something that I do. This part right here is in your book, but it's not in the Imagine Photography. So I want to make sure I covered this section so you know how to maximize to use the vendor's credit system. Okay. So the amount here is for $1,000. Okay. And once again, this is for the store. Or it could be for admin. Let's see. And yeah, we made it for admin. Okay. Administrative. Okay, so this is where you can add your extra notes down below. So notes, you could say discount due date. January 30th. Okay. So then that way you can make a note to yourself that if you need to make a payment. Now, can you set reminders? Yes, you can. And we'll talk about that in the last section for 5.3, I called it, which is actually the beginning of chapter 5. Yes, you can set reminders. Okay, but in this case, I'm not going to cover that yet. So I'm just going to go ahead and do what I can to make sure that everything looks good. Okay, so there you go. Right, Boswell Consultant on January 15. Terms is 2%, 15 net 30. Okay, for $1,000. And that is it. Okay, once everything looks good, I'm going to go ahead and click Save and Close. Okay. Right, so there you go. Now I received a bill from Boswell Consulting. Okay, right here. Oh, I did misspell Boswell, so yeah, I can edit that in anyway. All right. So now that I have that, now let's say I decide to go ahead and pay Boswell Consulting on January 30th, right? Which means I made my discount due date. Now, if you are responsible to do this, then go ahead and remember to do so. But if not, and you go ahead and send them a bill for all $1,000, a chance of them being very on track of keeping you, like giving you a discount. It's once again, it is a two-way street where you need to communicate with your vendor in case you forgot. It's not the vendor's responsibility to give you a discount if you weren't responsible enough to keep track of it. So in this case, right, it is a two-way street. So if they do recognize that, hey, you're supposed to get a discount, then they'll give you a vendor credit for the amount that you overpaid. But oftentimes, as a company, right, and you're trying to be conservative, especially with your money, right, you want to try to save as much as you can, being responsible for paying your bills on time and making those discounts, then you pay for what you owe. Don't overpay, or try your best not to overpay, because sometimes the vendors, they don't notice it either, and then you end up losing out that discount opportunity, because you weren't paying attention to when you paid it by, right? And the vendor's not responsible for that either. Okay, so in this case, there you go. So what we're going to do is we're going to create a vendor credit to go ahead and apply to this bill for the payment for the consulting fee. So in this case, that's what we're going to do. We're going to say that I want to make a payment on January 30th. So therefore, I remember I should receive a 2% discount on my bill. Okay, so that's exactly what we're going to do here. Is we're going to create a vendor credit. Okay, so once again, I'm going to go here to my plus new, the easiest way to do it, and I'm going to click vendor credit, and we're going to apply this vendor credit. Well, first we have to create the credit first before we can apply it. So therefore, I'm going to type in Boswell. There's Boswell Consulting, right? We are going to receive this on January 30th. Okay. Reference number, once again, this is related to bill number 1112. And I'm going to put a letter C to represent that I got a credit for this. Okay. So again, the best way to do this now, you never want to do this, because if you received a bill, right, and you're going to make a payment to it, you never want to write it in as the discounted amount. Reason being is because if you're not very responsible in making your payments on time, you definitely want to avoid making that mistake and paying them when you pay them, right? So in this case, you don't want to put the discounted amount in your bill. Yes, you can. That is a valid option that you can do if you know that you're going to pay them tomorrow, the very next day, so you're going to guarantee that discount. That way, then you don't need to put in the discount there. But for most cases, if you're thinking about this way too, why don't I edit my bill to reflect my discount by just modifying my bill to say I owe 2% less? Technically, that is not correct. Okay? You definitely don't want to modify your bills like that, because then you're not going to be able to record the discount properly. So the proper way to do this is to record the vendor credit and then go ahead and apply it to your bill. So then you do recognize that you did receive a discount, or a purchase discount in this case, right? That's just the best way of doing it. But again, there are ways that you can, yes, you can record your bill at discounted price if you're going to plan to pay for it soon. We call that the net method. But in this case, it's just not advisable to edit your bill to reflect the discounted price, right? Because you've already entered it in correctly. So the best way to do it is just to create the credit memo and apply it to the invoice. So again, um, um, reference number is 1112C. Okay, and what you're gonna do here, now it says right here that it's gonna go towards the legal fees. No, what you're going to do is you're going to refer this and link it to your purchase discount. So quick add it if it's not there as an expense detail for other business expenses. Okay? So let's go ahead and change this. So we're not going to be using this legal fees anymore because I am not charging my legal fees. I'm going to charge this as a purchase discount. Now, if you don't have it, you're going to need to quick add it, okay? So in this case, I'm going to add this. Once again, it's going to be under expenses, other business expenses. So other expenses, okay? And you're going to call this purchase discount. Okay? What is this description? Again, you received a discount on a purchase. Straightforward. Okay? And you want to make sure it is under business expenses. So you have, let me see, depreciation, other house, other miscellaneous. Let's see, where is it? Other vehicle. You should have other business expenses in here. Okay, let me try if it's under, I think it's under expenses. Under expenses. Okay, and you're going to have it under business expenses. Other business expenses. There you go, other business expenses. Okay, and then I'm going to go ahead and save. Okay. So there you go. I created a account on the go. Description. Received discount on services. Okay. And the amount. Now this is what's really cool about utilizing QuickBooks. You can have what's called a quick math feature. So in this case, let's say I'm an accountant and I'm not really good at calculating things, okay? So in this case, if I want an exact number or if I want the computer to do it for me, I do have the option to go ahead and enter 1,000, right? Using the number keypad on your keyboard, right? I'm going to multiply that by 1%. And if I go click somewhere else, it's going to tell me that's $10. Now, in this case, this was a 2% discount. So I'm going to multiply that by 2%. And that's going to tell me that it is $20. Okay? So again, you could use the quick math feature to calculate for you how much the discount is for and get the exact number, right? You don't want to accidentally put a typo in there and accidentally calculate the wrong number or calculating on the side, for example, okay? And of course, it's under administration. Okay. And then I'm going to go ahead. Everything looks good. So you got a $20 credit, right, for the consulting fees. And I'm going to, once again, go click close and or save and close. And once again, I'm going to locate that bill 112. There you go. Here it is. And I'm going to click marked as paid. Okay, and now I'm going to pay my bill accordingly by applying the vendor credit. I'm going to make a payment using the credit card once again. Visa credit card 5678. to Boswell Consulting, and I'm going to make a payment as of the 30th, and I'm going to apply that credit, so therefore I only owe $980. Okay, so once again, Boswell Consulting's at the top. How am I going to pay? With my Visa credit card. Today's the 30th, right? It says right here I'm going to pay $980 because what happened here is they automatically associated that credit that I have for $20. It's been applied because it's checked right there. And now I'm going to pay $980. And once everything looks good, I can save and close. Okay? So there you go. That is making a again, a payment on a discounted terms. Okay. There you go. Okay. All right. So that is it for that section for vendor credits. Okay. So let's go ahead and talk about what the difference between that is versus a vendor refund. Now, in this case, we received a credit for, again, if the vendor overcharged us, or if the vendor decided to give us a discount. So that's, again, they're doing something to modify the bill in that kind of way. Now, what happens when you decide to return products and services or items or things, whatever it is, to a vendor? Then you're going to be ending up receiving a refund. So that's the huge difference between that one. One of them is a vendor's giving you a discount. A vendor is overcharging you, so they're giving you money back. This one is when a vendor decides to give you money back for a refund, right? Straightforward. So let's talk about creating a vendor refund and how the refund actually how the refund goes and reduces whatever you're reducing, which is whether it's a bill or expense or a check. Okay, so let's take a look here. We're going to go ahead and take a look at our credit card right here. So we're going to do a quick one. So here, remember, we did a charge to Peterson Office Supply, right? We used our credit card. So this is an example of refunding money to a credit card. We made a purchase on January 1st for that office supplies that we made on for the printer for San Jose and the printer ink for the Walnut Creek. Now, in this case, let's actually do a credit card refund. How do we do that? You're going to be issuing the credit card credit. Okay? You're going to get a credit card credit and you're going to reissue. Let's say you had a problem with the printer ink for Walnut Creek. Maybe you ended up returning the ink cartridges because maybe you didn't buy the correct one. Okay? Or maybe you didn't need all the colors that you buy because, again, we purchased about, I think it was purchased about $200 and something worth of them. So in this case, maybe we didn't need all the colors. Okay? So we're going to go ahead and issue a refund right here by going to the store and actually returning the merchandise to the store. And because we used a credit card, right? That is the rule. When you're using a credit card and you're refunding an item to the store, it automatically goes back to your credit card, okay? You cannot request money out of it, okay? You cannot request a store credit on it. It automatically goes back to your credit card, okay? If you use cash, check, or some kind of form of payment, then yes, it will. Then you can request your money back for sure. But in this case, because you charge on a credit card, that is the rules of how you get a refund. Is it goes back to your credit card because it goes back to the original purchasing thing that you used, right? So in this case, that is the rules for credit card. So that's exactly what we're going to do is we're going to issue a credit card refund based on that. Okay? So again, if you end up getting a refund in general, you do have, if you click on that new button, you do have a actual refund available. Okay? In this case, right, if you're gonna end up receiving cash, you just do your credit, your vendor credit, and you're going to actually get the refund that way. Okay, and whether it's cash or whatever payment that you did, but in this case, this is a credit card credit. So that's why I'm going to go ahead and click on credit card credit. And what's going to happen here is you're going to be issuing from that Peterson. So Peterson. So here you go. Kim Peterson, right? Because you use your credit card, it's going to go back to the credit card. And the date here is, let's see, let's go back to it. We said the date that we're going to be receiving the refund for is on January 15 for the Walnut Creek location. So again, January 15 for the Walnut Creek location. So again, reference number, if you had that billing information on your receipt, then you would do the same thing, right? But in this case, we didn't have any. So once again, this was for the Walnut Creek location. And what was it for? You're going to get the category for the office supplies, okay, for $25, okay, and your description is going to be returning the ink cartridges, okay. So again, you're going to reverse the office supplies that you purchased. So office supplies, okay. Description, return ink cartridges. Okay, and for the amount of $25. Okay, and again, this was for the store. Okay, so now you're going to get a credit card refund for this, so therefore you're going to get $25 back. Okay, and I'm going to go ahead and click Save and Close. So there you got the credit card credit there. Okay, now how do I see that credit card transaction or see that credit card credit go through? Well, this is what you can do too, right? You can either go to your credit card statement or, go through online banking to your credit card company, and you can be able to see it for yourself go through. Now, if you're talking about looking it through on QuickBooks, you can go ahead and go to your chart of accounts. So here I've already looked up my credit card here, and I'm going to click View Register. If I click that View Register, notice this, right? You have the credit card credit right here for $25. So you got the reimbursement for that $25 right there. That's how you see the credit card credit go through. Okay, so first you made the purchase here for the $290, and here you got the reverted $25 credit to your credit card. So that's how you're able to see it there. Okay, and that's how you do that. Okay, all right. Any questions? Right? Is yes. Okay. All right. So again, if you're going to do a refund, you can use a credit. Again, a vendor credit to issue a refund. But in this one, this is for refunding on a credit card. Okay. So again, how do you count? How do you check your balances? So we already just did that. Okay. So last section for this chapter is going to be looking at managing loans. Okay? Managing loans is going to be a big one because, again, especially when you're doing business, whether taking out a simple loan, right? Whether it's to pay for like a business loan to help you start up your company, whether it's you took a loan to buy a vehicle for your company, or whether it's just to take a simple personal loan, right? Whatever reason that you have it, you do need to make sure that this is one of the important things that you want to remember to do is to have and how to manage your loans. Now, in this case, you don't have a loan manager, okay? So you have to be very responsible for making sure that your loans are being paid off and so on and so forth, okay? And that making sure that, especially with loans, one thing that it always comes true to loans is you're always going to have interest expense, right? Because when you borrow money from any kind of institute, whether it's a credit card, whether it's a bank, like an actual loan from a bank, you're going to be subject to borrow money, but with the price, right? You're going to pay back the money plus interest. So it's very important, once again, that you also are aware of the interest payments that you are making, okay? So first, let's go ahead and set up the loan in the first place. So in your book, you decided that, hey, for Imagine Photography, we wanted a cargo van, okay, to help us carry our equipment around, right? So you're gonna go ahead and buy a cargo van, and you're going to need to set up this loan. Okay, so first we need to set up a few accounts to have available readily on our account. On our chart of accounts, right? So you're going to be creating the first one is going to be a fixed asset, which is going to be your vehicles account for the cargo van. Okay? So let's go ahead and create these accounts in your chart of accounts so we can have those readily available to do our loan and so on and so forth. Okay? So I'm going to go to, again, how do I get to my chart of accounts? I can go to my gear icon and click on chart of accounts. So here we are. I'm going to go ahead and verify if I even have a cargo van. And in this case, I don't. Okay, let's do fixed assets. I can tell you right now, I don't have any fixed assets except for maybe a few things. Okay, so again, here, let's take a look at my fixed assets. So fixed assets, I have long-term assets. I got I have vehicles. Okay, but under vehicles, do I have anything? No. So in this case, what I'm going to do is I'm going to go ahead and create an account under vehicles. Actually, let me see. Do I need to create a? So I have, so the account type will be under vehicles. Okay. So let's go ahead and, account type will be under fixed asset under the vehicles. So let's go ahead and add a new account in here. So go into the top corner, clicking on new. And what we're going to do is we're going to associate this to a fixed asset. Okay, so in this case, we got assets. Okay, and this is going to be under fixed assets under vehicles. So let's see, we got vehicles. So it's going to be under vehicles, and we're going to call this account name cargo van. Okay, and description is going to be, again, a cargo van. Okay, and then there should be an option for you to track depreciation. So in this case, let's see. In this case, with the newer type of version here, you might not have that option available to track depreciation. Okay, So some of these are sometimes are automatic, but in this case, let me see, more info on opening balances. So no opening balances here. Balance sheet once again. So again, depreciation should be automatic, especially when you have fixed assets. So again, we already put it under vehicles, which is a fixed asset. Okay, and I'm gonna go ahead and click save. Okay. So once I look at my fixed assets list one more time, okay, I'm going to notice that I have vehicles, and underneath vehicles, there you go, is my cargo van. So it's under a fixed asset, vehicles, cargo van. Okay, so let's see what my next one here is. I need to do a long-term liability for the loan, okay, and I'm going to put it here for change to notes payable. So I'm going to change the long-term liabilities account and change it to notes payable. Okay, change from business loan to National Bank cargo van loan. Okay, so this one, I'm overriding an account. Now, remember, if you're not going to use a specific account on your list, you have a couple options, right? You either override it, right, edit the information and completely change it, or you inactivate it. Now, remember, your chart of accounts, you only have 250 items on your account list that you can use. So right now, we didn't use that many accounts so far, but you want to make sure that you are keeping in mind how many accounts are you using and how many accounts exist on your chart of accounts. So if this is something that you want to override or make changes to, locate that account so you can make changes to it. So in this case, this one is a long. Okay, so I put in long. You got business long-term office equipment, and then you have long-term equipment, office equipment. So nothing there. It says to change the business. Let's see. It says to change from business loan to National Bank loan. So let me see, business long-term office equipment. Okay, so it doesn't seem like oh, right here, business loan interest. Okay, business insurance. So that's under there. Business license. Short-term business loan. So I have a short-term business loan, but not a long-term business loan. So maybe I need to add it in there. So business long-term office equipment's obviously not going to be that one. So you want to make sure that is a loan payable. So you want to make sure you, in this case, I'm just going to add the account in here so I don't mess up anything else. All right. So I'm going to add a loan in here. So again, it's going to be a liability. Okay, and I'm going to have it located under, let me see, other current liability. So it's a long-term liability. So here you have mortgages. Here you have the truck loan. Okay. It's not a truck loan. Okay, whatever. Okay, I have the truck loan in there. And I have notes payable. Account name is going to be cargo. Okay, wait, hold on. We said we're going to change this to change from business loan to National Bank cargo van loan. So in this case, I am just going to add it in there. National Bank. Okay, National Bank cargo van loan. Right, description, exactly the same thing. Okay, And of course, no opening balances or anything, so I'm going to click save. So here I should have, if I put in loans at all in here, LOAN, loans, I should have, let's see, here, National Bank under truckload. Oh, here's the business loan. Oh, but it's for interest. Okay, and then I have vehicle loan interest. So in this case, these are expenses. So again, we want to make sure that we have the long-term liability for that loan. Okay, and then let's see here. You need to have the interest expense, other expenses for the interest paid. So therefore, I'm going to go ahead and add that in there. Now, in this case, I have the business and vehicle loan interest paid. Oh, right here, vehicle loans interest paid. I already have the account right here. Okay, other expenses, and it's I think I'm going to change this one. So how do I change it? Go to this little drop down menu here and edit. So this one says vehicle interest paid, right? And I'm just going to change this to just interest paid. Okay, and I'm going to click save. Right, so you have the interest paid. So then now we are ready to enter in our liabilities, right? So starting with the first one here is we are going to be writing a check because, of course, in order for us to buy the car, you got to go to the dealership, okay? And when you go to the dealership, you're going to make a down payment, okay? Unless otherwise stated otherwise, maybe you might have the opportunity where you get a 0% down payment, 0 APR, whatever kind of deal that your dealership offers you. Oftentimes, yes, you get the opportunity to make a 0 down payment. However, you still have to pay the tax on it. Okay, that's the rule of thumb when you go purchase anything from anybody. You still got to pay sales tax on anything. Nothing is free in the world. Okay, so in this case, even though you didn't have to make a down payment, you still have to pay the tax on it. So in this case, we are making a down payment to my truck loan, or in this case, not truck loan. We're making a down payment to purchase the cargo van, and we made a payment for $5,000. Okay, so this is check number 1010. So we're going to use the write a checks feature to go ahead and put in go ahead and buy the cargo van. So once again, I'm going to use the write a checks feature. Okay, so checks. And this is where we get to quick add our vendor because we are making a random purchase from a random place. We're going to purchase this from Weathers Auto. Okay, Weathers Auto. Okay, Weathers Auto. Okay, if you want to put dealership, you can. So you know that what it is. So Weathers Auto. I'm going to go ahead and quick add that because I don't have that person on my record. So I go ahead and click on here. Quick add. Now it's going to ask you right now. It's going to pause from your screen and tell you put in all the information that you want into here. Now, if you're trying to do this and trying to get done and get through with this transaction, you should be okay with just the vendor name. Okay, we put in Weathers Auto. Okay, and I can always save this and then fill in that information later on. Okay, here, how are we going to use? We're going to pay. We're going to pay by using our checking account here. So checking 1025. Okay, we are purchasing the cargo van on January 21st. Okay, January 21st. Check number 1010 for the location, right? Obviously, you're going to be buying the cargo van for usage for both stores. Okay, so overhead. We are going to put the reference number as 1234567 So reference number. Okay, in this case, I don't have a reference number. Okay. And let's see what's next. You're gonna select the account to be the cargo van. It's gonna be the 2024 Transit for $5,000. So category, once again, we purchased a fixed asset, right? We purchased a cargo van. Cargo van. Okay, description, 2020 Ford Transit. Okay, the amount that you paid was $5,000. Now, of course, you could say this, and you could say down payment. Okay, for $5,000, and this is for the store. You purchased the car for the store. Okay, and other notes that you could put in here, again, you could put your reference number here. So again, reference number 12340,987. Okay, everything looks good. You're making a payment for $5,000, and therefore, yes, that's it. Everything looks good. Okay, using your checking account to Weathers Auto for the cargo van. Okay, so I'm going to go ahead and click Save and Close. Okay, boom. So I just made a down payment to buy the cargo van from the auto dealership. Okay, and of course, I may have made a down payment for $5,000, but that very same day when I acquired my cargo van, I also took out a loan. Okay, I took out a loan from National Bank itself, right? So this is what I need to do. How do I acknowledge that I have a loan? So in this case, because remember we entered that loan into our chart of accounts, so this is what I have to do. I need to create a journal entry to represent that I paid for the cargo van using a loan, okay? Now, there's no form to be able to do that, right? Because I can't use a national bank loan to pay for something that I can on there, right? There's no form that can tell me to do so, right? I can't use the expenses. I can't use the write checks feature. Okay, so in this case, I have to use a journal entry. Now, again, chapter 5 is going to talk about journal entries, but you are also exposed to it in chapter 12. Now, then, in this case, again, we will end up reviewing chapter 5, but in this section here, I'll show you how to enter in a journal entry. So the first thing you're going to do is, again, go to your best friend and click on that new button, and then on your far right corner, you have journal entries. Okay, so when I click on journal entries, right, it's going to tell me what is the date. So again, you bought your cargo van on the 21st, so that means you're going to have the loan on the 21st, right? As you can see, you have adjustment number I have no idea. I'm gonna put adjustment number 1. Okay. And let's see what else we're gonna have here. You can again, your description is going to be your 2024 Transit, and you're going to debit your cargo van, and you're going to credit your national bank loan. Okay, so in this case, this is what you're going to do. Now, this is the part where if you haven't had the accounting portion, right, then you're not going to be familiar with using the debit and credit system. Now, in this case, I am using a loan to essentially buy a fixed asset, right? Now, in this case, a loan is a liability, and because we are owing the National Bank for that loan, that is mean we're going to be creating a liability, which means we increase our liabilities using a credit. And we increase our fixed assets, which is an asset, by debiting our account. So that's exactly what we're going to do. We're going to say that we acquired the cargo van, right? But in return, we end up taking a loan. Okay, so National Bank, there you go, National Bank cargo van loan right here. Okay, now we're going to debit for $25,000. And that means my equal and opposite credit is I borrowed $25,000. Okay, description again is going to be for the 2020 Ford Transit. Okay. Okay. Is there a name to that you're going to link this to? Nope. Location. We already said that this was for both stores, so it's going to be overhead. Okay. Overhead, and we said it was for the store, right? We bought the cargo van for the store. Okay, so again, the drop-down menu is where I could just click down that drop-down menu and it will give you the options to select from. So once again, the rule of thumb for doing a journal entry is you want to ensure that your total debits match your total credits. So then your numbers are always balanced in every single transaction. Okay, so once I've done that, this is how I assume that I used a loan to buy a fixed asset, right? This is how I acquire the loan in the first place. Okay, this is how I create the loan balance. So there you go. I already went ahead and now it says check mark that yes, it went through. So let's go back to my chart of accounts and take a look, right? So let's take a look at that National Bank loan. Okay. Here you go. National Bank cargo van loan is outstanding for $25,000. So yes, we know that because that's exactly what we took the loan out for. Now let's actually take a look at that cargo van. Okay. So here I have the cargo van and look, it is outstanding for a total of $30,000, right? We borrowed $25,000 from the bank to buy the cargo van, and we also made a down payment for $5,000. So that means my value for this cargo van has a total of $30,000. Okay, because we put a down payment and we borrowed $25,000 to buy it. Okay, and there it is, right? So there you got the total amounts there. Okay. All right. So now that I acquired my loan, what is the next thing that I have to do? I eventually have to record payments on my loan. Now, here's the rule of thumb when it comes to making payments on loans. Now, every time you make a payment, okay? Now, oftentimes, especially when you borrow money from an institute, right? Whether it is an actual bank account or whether it's a credit card company, okay? They are going to charge you interest. And how the rule works is you always pay interest first. Never ever will you ever pay your principal off first, okay? You pay your interest first, and then whatever amount of money that is extra is going to be going to go towards your actual principal. Now, especially taking a loan, you need to know that because you already promised to borrow the money ahead of time and you're going to pay them back. This is where they already pre-calculated the interest and they're going to expect you by the time that you have your loan amount for, right? That means at the end of your loan payment, you've already incurred all the payments for the interest and you paid them all off first. Okay? And then every month that you get charged that interest, you pay that first and then the rest of the money goes out to your principal. So oftentimes they usually give you a set, steady payment amount to pay everything off. Now, if you've ever heard of a situation where, no, if I make my payments now, the sooner I pay off my loan, the less interest I'll be charged. No, no, no. They've already calculated the interest. They added it to your principal and divided by the number of payments that you are allowed to pay. And that is what you get your monthly payment as. It's the payment including the interest. So they already calculated the interest for you. So doesn't matter if you make a payment, everything off sooner, you basically are still paying the entire loan with interest already included. Okay? Now, that's not the same thing as a credit card, right? A credit card is a opportunity where you get to fluctuate your interest payment, right? But the more you borrow, the more interest that you get charged, right? The less that you borrow, right, the less interest you get charged. In that kind of situation where you're using a credit card, they can't predetermine the set amount that you borrowed because it's based on how often you use your credit card and rack up those money that you've charged, right? So that's why it's a total different story when you take a loan versus borrowing a credit card. Two different things, okay? Now, the worst one is going to be, unfortunately, doing that credit card. Because you have the ability to defer your payments. And that's where interest is going to rack up and hit you a lot harder than it is for you to just have a steady payment and have a deadline to just pay everything, right? The more you defer, the more interest you rack up. So that's the rule of thumb there, okay? So again, now, of course, we're going to go ahead and make our very first payment to our cargo van to our loan. But remember, we have to pay the interest as well. So usually this information, you're going to end up receiving a bill from your lender, right? From your whoever you borrowed the money from. So in this case, National Bank is who we borrowed it from. And they're going to give you your records, your statement that says, hey, you have a loan. How are you going to pay it? XYZ. This is your interest that you got charged for the month. This is the amount of payment you have to pay for every single month, and so on and so forth. So in this case, like I've mentioned, right, it's already pre-calculated. So that's why they're telling you right now, for this month, this is how much interest you owe. So usually, oftentimes, that's why you're going to make your payment. You're going to pay the interest first, and then you're going to record the rest of the money to the actual loan. Okay? So here you go. You're going to record an expense. You're going to use your checking. So again, if you choose to pay online, you're going to have an auto clearing house where you're using your bank account and you're wiring the money straight to the other bank, right? So again, you're doing an electronic funds transfer, but in this case, we also refer it to an auto clearing house, okay? So in this case, that's what we're going to do. We're going to do a checking account, auto clearing house for the following month, which is for February 21st, okay? And let's go ahead and do that. So again, you're going to go ahead and do your expenses because you're doing an electronic funds transfer, right? And you're going to make a payment to whom? The national bank, so you may need to quick add them. Okay, so let's see, you're going to make a payment to national bank, so you're going to quick add them, and then you're going to use your checking account and pay via online. Okay, so in this case, we're going to quick add national bank. Okay, so here you go. I'm going to add national bank. Okay, so you go national bank. I'm going to go ahead and record the rest of the information later on. So there you go. What am I making a payment for? Usually, typically, if you're going to pay a loan, you usually can't use a credit card to pay your loan. Okay, so there you go. Checking. And what form of payment are you going to make? This is going to be an auto clearing house, okay? Or if you know it better as an EFT, you can put EFT. So I added them in there. There you go. And save. So there you have an auto clearing house, and you're making a payment for the following month, because usually these kind of loans, the day that you receive this loan, that means the following month. It's a date-driven month. So therefore, the next payment that you're going to make your loan payment on is going to be on the exact date that you took the loan out, but the following month. So in this case, you're going to make a payment as of February 21st, 2022. Okay? Reference number. So again, this is going to be whatever bill that's going to be on your actual bill, right? And again, it's going to be for an overhead because you're paying for both stores. And then, of course, you're going to pay the National Bank Cargo van loan, okay? So again, overhead, right? Now, in this case, it doesn't tell me how much I need to pay because I didn't list how much I'm going to pay, right? I haven't listed out the amounts yet. So first things first, right? You're going to identify that you're going to pay your national bank cargo van loan, right? But the second thing you're also going to be paying for is your interest. Now, like I mentioned before, interest is always going to be paid first. So here's interest paid, okay? And then again, you're going to say for your description, right, your monthly payment on your loan, right? You can put that in there. Again, this is for both stores, so it's going to be for both overhead, or you could do it as admin, whichever one that you have it as. But in this case, right here, your total monthly payments is $500. So they tell you that this month your interest is $62. So again, whatever interest rate that is, you're going to make a note what that interest rate is. But in this case, it's going to be for $62.50. And then you can do your math, quick math here. 500 minus 62.50 will give you 437.50. Okay? So again, that is the rule of thumb. You're always going to make a payment to your interest first, and then so on and so forth. Class overhead. Okay. Okay, so your total amount that you're going to make a payment for is a total of $500. So once everything looks good, so I'm going to go ahead and save and close. And what happens here is when you make this type of payment, right? Let's go ahead and take a look at how much I owe for my loan now, since I made a payment on February 21st. So if I go to my, here I am, I'm already on my chart of accounts. If I type in my loan, right, notice this. Okay, let's do cargo van. That one will show up immediately. So cargo van, notice this. I only owe $24,562. Why is it $24,562 instead of the $24,500? Because I never paid $500 towards my cargo van loan. I had to pay $62 worth of interest, and then the rest of my money went to the cargo loan. So again, that is exactly why you have this right here. Okay? And interest is not included into your loan here because that's not what you owe. You promised to owe the $25,000 first, and then the interest that's going to be included onto there, right? So that's how the idea works when you do a loan is you're not paying the cargo loan. You're paying a separate promise, right? The separate payback with the interest. And that interest is a separate payment that has nothing to do with your cargo loan, right? So that's your promise to pay back. And there you go. Okay? So you only paid $437.50 to your loan. Okay? And that is it for the chapter 5.1, other additional accounts payable section here. Okay? All right. So now we're going to go ahead and continue on with chapter 3, taking a look at what happens when we have sales and sell to our customers, and then so on and so forth. So that is the end of chapter 5.1.